Hi, I'm Sue Bruns with Keller Williams Realty, and today I am here with Senior Loan Officer Brad Burdett from PRMG. Welcome, Brad.
Thank you. I appreciate it. It's good to talk to you like always.
It is good to talk to you and see you too. So, Brad, I thought today we could do is talk about all things buyers need to know when they're getting ready to purchase a home, and all the things that a person would need to know if they want to refinance their home. We had a great conversation about this not too long ago, and I thought it'd be great to bring it on a video where we could talk about it and maybe help somebody understand what they need to know, and maybe even help me as an agent understand how to better educate my clients so that they're more prepared when they're ready to purchase or refinance a home.
Absolutely. So, as you and I were talking just recently, there's so many different things that go into play as it relates to getting a mortgage, right? Whether you're purchasing a home or refinancing. And it's the small details that a lot of people miss, and it's not necessarily their fault because we've all been conditioned kind of improperly or the wrong way through advertising and marketing for companies, right? So we're already, as a consumer, or a customer, or a borrower, or a buyer, we're already kind of behind the eight ball, right? So it's always very important that you connect with a good seasoned loan officer, somebody who's taken the time to understand this is not just a closed loan, right? Or a deal for me or a deal just for you, but that we're looking after people's financial stability, right?
Absolutely, because we have a fiduciary responsibility to our clients.
Yes, absolutely. And so, for an example, on the purchase side, right, if you're going to buy a home, what you want to make sure you're doing is when you're talking with your loan officer, is that they're giving you options, right? Those options may be with or without points, right? Because everybody kind of gets hung up on interest rate. And interest rate's very important, but it's just one part of the puzzle, right? Because I can tell you, well, I can give you the lowest interest rate out there. Don't talk to anybody else. Well, that low rate may end up coming up with a really high cost, okay? And just because something costs, just because the interest rate's low doesn't mean we don't need to pay attention to the cost.
Exactly.
Right.
So what are some of the things that will help educate a buyer in advance before they even apply for their loan? What are some of the things they need to have in place?
So, it's pretty... preparing for the mortgage transaction should be a conversation with the loan officer, but to prepare for yourself, get together all of the important pieces of information, pay stubs, W-2s. If you have any type of self-employment income or any type of rental income that's reported on taxes, we're going to need tax returns, bank statements. You're going to need at least 2 months of bank statements in most cases. Those are the basic items we would need to get, and then once we're able to review those items, then we can dive a little bit deeper with the borrower and the customer to determine if there's anything else that's left.
Okay, so is it the same when somebody's getting ready to refinance?
No, it's not. So let's kind of get back. Let me go back to the purchase side. So when we talk about the cost being, if I tell you, hey, my rate's going to save you $100 a month, that's great. But if my cost is $8,000 more to do business, right? Right. That's 80 months of making payments before you'll actually realize a financial benefit for taking the lower rate and spending that much more money. So all of those things need to be taken into consideration. Of course, loan program is important, right? How are you actually executing the loan? What does the loan program mean to you? For an example, FHA is a great loan program. It is no longer built just for first-time home buyers, right? So, and here's why. A couple of years ago, FHA reduced their monthly mortgage insurance premiums. And when they did that, they became way more competitive with conventional financing. And why is that? Because typically, FHA is going to have a lower interest rate than conventional loan. And conventional financing is still a great option. In fact, if you have high credit, a good down payment, you're probably going to end up going with a conventional loan. But it doesn't mean you should rule out looking at FHA. There are other factors involved with it. The upfront mortgage insurance premium with FHA is there. And the monthly MI may be lower, may be higher, but it still needs to be examined. And the loan officer should be able to walk you through that so the customer and their family can sit down and make a good financial decision for themselves.
For the general public and our audience, what they don't know right now is that Keller Williams Spartanburg and myself as a licensed loan officer partnered with PRMG. And so can you talk to how PRMG is going to work with our clients to better serve them?
Absolutely. So at the end of the day, we're going to be a team from start to finish. And listen, I've been doing this for a long time. I'm not going to say how long, or I'll show my age, but been doing this for a long time. And real estate partnerships come in many different forms. But when we have a partnership like this, it's just a little bit different, right? You are now an MLO, right? We are MLOs. So you've taken the test and passed the test, which is a very difficult thing to do, right? So you've got great knowledge in that side. So right out of the gate, the first conversation they have with you as a real estate agent, not only do you bring real estate agent expertise to the table, but you also have some mortgage expertise to bring to the table as well. So with your first conversation with a buyer, you're getting to know them, you're understanding them, and then they get connected with me, right? Because I'm going to ultimately be the one that writes the loan for them. They're from start to finish have real estate and mortgage expertise to back them all the way through.
Gotcha.
Now, you brought up refinancing.
I did. I was
a
going to ask
minute
you to
ago.
get back to
Yes,
that.
yes. So this is part of, I would say, the largest single financial mistake in the United States is refinancing.
How so?
So for example, I have a customer right now that's been in his home for almost 6 years, and he's going to do a refinance. And he was talking with his current servicer. They're like, look, we currently service your mortgage. We're going to make it easy. There's no reason to talk to anyone else. And he's right to an extent, right? Current servicers, they can help a good bit and make things a little bit easier sometimes. But here's where they're going to fail, and lots of other loan officers fail customers, is they were immediately going to place him back into a 30-year term, okay? So when you buy a home, especially the first 7 years, but the first 5 years are super heavily loaded on interest. So if you look at an amortization schedule over a 30-year period, and you look at the first 5 years, you are paying exclusively interest. You're gonna pay more interest than you are principal. So that's important. So out of your mortgage payment, more money is going towards interest every month than it is towards the principal, okay? So if he's been in his house for 6 years, even if he refinances to a lower rate, he has to repay that interest-heavy period again. Maybe less interest, but he's still repaying a set of time that he doesn't need to do. So what we did is we said, hey, we'll put you back into a 26-year term. So I can set your term at whatever I want to. So that way he did not lose the years of interest he's already paid. When we did the calculations, if he decided to sell his house 8 years from now, he'll make an additional $21,000 on the sale of his home by sticking with the 26-year mortgage versus going back to the 30-year mortgage. And even though he was going to save $189 more a month by going back to the 30-year term compared to sticking at the 26-year term with the refinance, by the time we added up all of the interest he was getting ready to repay, he was not going to save money over time. So that's just one small way to look at refinancing versus going back to the 30-year term. There's a couple of other ways to look at it. And obviously, if anybody has any questions, more than happy to answer those questions for them. But people need to be aware during refinancing, if you're not presented with every option that's available to you and how to structure the refinance, then you haven't taken the time to look at most people's most important asset in their life, which is their home. And if you take the wrong step, you really can damage the ability to treat your home like an asset and make the most money possible when it's time to sell it.
Yeah, so let's talk about equity, because we know right now homeowners have more equity than ever before.
Right.
So what are some of the things that you would suggest people do with their equity?
Sure. So, what we're seeing a lot right now is we're watching people who taking advantage of the big equity position, they sell their home, they take that equity position, they move it into a new home, and then when they do that, they're asking the seller. So if you put down more than 10% on a conventional mortgage, okay, the seller's allowed to pay up to 6%. Actually, if you put down more than 20%, they can pay 9%. But let's focus on the 10% for right now. So putting down 10% to 20% down, the seller can pay 6% of the sales price towards your closing cost. Okay, so let's say it's a $300,000 purchase. Okay, that's $18,000 that the seller can contribute. Doesn't mean they have to, but they can. So if you got lucky and got that amount of money, you can use obviously a lot less than $18,000 for the normal closing cost, and then you can use the rest to buy your interest rate down. And in today's environment, that's quite possibly pushing the interest rates into the 4s.
Nice.
Yep.
So we're saving money.
Saving money.
We're getting a bigger house or a better house for our circumstances at the time, and we're buying down our rate at the same time.
That's right. And most recently, the last couple of deals I've seen like this, people are we are still talking about rates being really low from COVID for a lot of people, but I'm still seeing where people are making this move and their payments are virtually about the same. right? So they get to bump up, make a move to where they want to be, and their payments haven't changed on that new purchase.
Sure. And as an agent, what I would recommend would, if somebody's going to do that, is make a full price offer or come in over full price and then ask the seller for that concession. And if they're willing to work with you, then you're in the driver's seat, you're winning.
Absolutely. Yeah, and there's other ways the lender can help too. So make sure if you're going through that process, want to tap into your equity to make a move now, talk with your lender as well. There may be ways they can help move the rate down for you too.
Great, and I know PRMG does do that from time to time, so that's nice to know. So let's talk about the interest rate, where it is now, and what do you see happening as we move into 2026?
Oh gosh, I wish you would ask me that. So the reason I say that is there's so much involved right now in the market, right? You and I think we're talking on Monday.
Yeah.
So at the end of last week, the Fed and the government announced they were going to do a $200 billion purchase of mortgage-backed securities. Right, so not to get too granular here, that's called quantitative easing. And this will only be the fourth time in history that the Fed has done this. The first time was in 2008, the second time was under Barack Obama, third time was during COVID, and now this one. So what that does is that kind of artificially improves the mortgage-backed security market, which will then improve mortgage interest rates. Now, as good as that is, and the market reacted, right, sent that message on Monday, and I was like, gosh, look at these charts. The rate's already fallen since Thursday afternoon. Here's where we are. Yep. And most likely that's going to lead into a downward trend moving forward, but it may not be a sharp downward trend really fast, because there is a lot of push and pull in the market as it relates to inflation and other economic data pieces. But the important thing is that we're already in the high fives for the first time in a long time, with conventional interest rates in the mid upper fives for government rates like FHA, VA, things of that nature.
Yeah, and I don't think people really understand that we're in the mid fives to some degree for those loan types. Yep. And with a seller who's willing to buy down the rate, you're in the fours.
Very quickly and without spending a whole lot of money to get there.
Yeah, so let's talk about the fact that we saw rates dip into 2 to 3% range there during COVID. We're seeing them in the 5 to 6% range now, with the potential to come down into the 4% range. Sure. Let's talk to buyers or our audience and let them know where that stands in comparison to rates historically.
That's still way below the historic average.
Yeah.
Yes. Historically speaking, rates are, they're going to average much higher. They're going to be around in the 6s and in the 7s, right? You're going to see, so I started this business in 2006, and I've seen interest rate market do this. It's somewhat cyclical, and we are going to see lower rates. The question is when, right? And then how far down does that go? But we don't know the answer to those questions, right? So I've been telling people for a while now, hey, listen, if you find the home, and this goes right back to what you said just a minute ago about people's equity, if you find the home that you love, go ahead and buy it now. Have a good rate, because rates are already starting to move into the 5s. Have a good rate, and then when the rates drop, refinance like the way we spoke about earlier, right? Refinance like we talked about earlier, because if you wait a year or 2 or 3 for rates to drop lower and you go to buy that home, you're going to pay more for that home, because we just talked about people with high equity positions, because when they bought their home several years ago, now their value has grown, right? And now they've got a lot of equity. You don't want to be the person that said, hey, I waited for rates to drop, but I paid $70,000 more for my home, or $50,000 more for my home, because when you do the math, your payment's going to be the same or higher for waiting for rates to drop.
Right. Yeah, and that's the discussion I'm having with my clients right now as well. So I think this is a good spot to wrap up our discussion, and so what I'd like you to kind of come back to a little bit is just identify maybe 4 or 5 bullet points that you want our audience to take away with them from our discussion today.
Absolutely. So make sure when you're having these conversations with a lender or multiple lenders that they're giving you multiple options. And if they only give you one option, to have them explain to you why they only gave you that one option. Not every customer has multiple options, right? Because every customer is different. Doesn't matter. We may feel the same as our neighbor or our brother or sister, but every customer is a little bit different. So if they don't give you multiple options, ask why. All right, that's number 1. Number 2 would be make sure you understand cost and have them explain the cost to you. Have them give you options revolved around the cost. And then number 3 is to make sure you explore many different loan program types, right? So cost, programs, and options. That you just need to see everything that you can.
Great.
Yep.
Thanks for your time today. I appreciate it.
As always, I appreciate talking to you. Yes, ma'am.
Hey guys, thanks for watching my video today. And if you have any questions or if I can help you in any way, please call me at the number below and let's get started on your journey to home ownership.